Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a quick look at some of the major currency pairs as we head into key jobs reports in US and Canada at 8:30 a.m. Non-farm payroll is expected to rise by 200,000. The unemployment rate is expected to come in at 3.6%. That's unchanged from the previous month, and average hourly earnings are expected to rise by 0.3%. Those are the highlights for the U.S. jobs report. Taking a look at some of the major currency pairs on a more hawkish or bullish or stronger number. The dollar versus yen will move above its 100-hour moving average. That's this line right here. As you can see, the price has been leaning against that level in the early European morning session, early U.S. session at 142.81. If we get above that level, we'll bring back into play this level right here, going back to different swing lows and highs, and trading this week. The price used that level as resistance before breaking to the upside and trading yesterday, and only to fail and then move to the downside. So this area right here between the 143.44 and 143.54 would also need to be broken and stay broken to push the price even higher toward 144.12 to 22. On a weaker number, watch the 61.8% retracement. This is of the move down from the high going all the way back to this day right here, which is June 30th. The 61 comes in at 142.073. That level also corresponds with this swing area between 141.84 and 142.07, and then we'll have the 200-hour moving average to contend with. That level comes in at 144.66. Break below all those levels, this swing area right here, the 200-hour moving average, and opens the door for the 50% retracement level, and that's the progression to the downside on a weaker number in the dollar versus yen. Let's take a look at the euro versus US dollar next, and this currency pair is stuck between, almost right in between the 100-day moving average below, which we found support earlier this week, although the price did move a little bit below it on this day, or these two occasions here, getting below 1.0919 with momentum. Would have traders looking toward this area between 1.0886 and 1.0899. Break below that level, and we'll start to look toward our low prices down here for the month of July, which come between 1.0833 and 1.0848. That's on a stronger number, where the dollar goes higher on a weaker number. Getting the 100-hour moving average has proved to be a level of resistance on a number of different occasions. Admittedly, the price did move above it a little here and a little right here, but those are quickly reversed. So getting above that falling 100-hour moving average, it's an easier hurdle at 1.09674 would increase the bullish bias and have traders looking toward the broken 61.8% retracement and the falling 200-hour moving average. As you can see, the last time the price tested the 200-hour moving average on this day right here, the price found willing sellers and fell sharply. The last time the price traded above the 200-hour moving average was back here on July 20th. So it's been a long time since the price has been above the falling 200-hour moving average. If we're able to get above that level, that would be tilt the bias in the short term more to the upside for the euro versus US dollar. Finally, I want to take a look at the dollar versus Canada. Why? Because we do have the Canadian jobs report, which with the expectations of an employment change of 21.1 versus 59.9 last month. The price of this is 4-hour trade is trading to a new high here, so a weaker Canadian dollar, higher US dollar. That is approaching the high price going back to this week, which is the week of July 7th. This is the 4-hour chart again, so 133.864 would be the next key target on continued US dollar buying, Canadian dollar selling, and above that is the 100-day moving average at the 134. Looks like 134 level, the natural resistance level as well. Get above that level is more bullish. Stay below it, keeps the bears more in control. On the downside, we're going to need to break below the 38.2% retracement of this last leg to the upside this week. We did see a sharp move to the upside in the dollar Canada this week with two big steps higher in trading yesterday. The price did come down, tested the 38.2% retracement, broke a little bit below that, but found support buyer. So actually, I'm going to move that retracement level up a little bit because we do have a new high here today. That retracement that now comes in at 133.37. We need to get below that level, and also the 50% retracement at 133.22 to give the sellers a shot at this pair moving to the downside, so watch those levels. So there you have it, a look at 3 of the major currency pairs as we head into key jobs reports. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.